they make the syrup and then they distribute it to bottlers who own a specific territory, and from there they make the product themselves. And so we saw good. So it's been labeled the best global brand for 12 consecutive years. So what that essentially means is it's the #1 brand. People recognize it the most around the world. And it has 500 brands in 200 countries with 1.7 billion servings each day. And so they own stuff, not only Coca-Cola and Sprite, but also Minute Maid, Simply Orange, Guala fruit juices, Nestea, Dasani, Fuse Tea, so they own a lot of different stuff. And they have a really, really strong brand power. This is just a couple of examples. In Scotland, Coca-Cola now outsells a really, really long popular locally produced cola called, I'm not quite sure how to pronounce that. It was local and they managed to nudge it out in the market. And in places where they haven't been able to nudge out the local colas, such as Peru, they actually buy stake in that locally brewed soda. So they have been expanding where they can't compete. And so just this quick comparison with Coca-Cola and its other competitors. Has a low stock price and a relatively high return on equity. Coca-Cola, each stock is about $37.42 as of today. In comparison, its competitor PepsiCo is almost twice at $17.68. And Coca-Cola currently has a 0.1% higher ROE than PepsiCo and a much higher one than Dr. Pepper. This is just some more quick info. So this is current price at the bottom and the return on equity. Another talking point is the debt over equity ratio. So as you can see, Coca-Cola is in pretty good financial health right now. And its market cap is significantly larger than PepsiCo.
And so another positive that we're going to talk about today is like their opportunity for growth. And one of the major points of this is the international opportunity. So as you can see from the chart, right now in the United States it's approximately 20% Coca-Cola's overall unit case volume. But you're starting to see a larger presence of Coca-Cola within developing nations such as China and Brazil. And with these bolstering economies, we expect them to help sales in Coca-Cola and in the company in general. Another point is again, in comparison to its competitors within the cinema market, its overall growth rate is much higher. Its main competitor is Pepsi, which is actually having a very low at 3.5%, whereas Coca-Cola is at 28.81%. And so one of the main reasons why we suggested this particular stock was that for engineers it's important to, especially for new investments, it's important to have a safe stock. And the return price is fairly high, so a lot of what you're going to be doing with this stock is just holding onto it in your portfolio and making money off of dividends. So some of the bad for this particular stock is that it's very relative to input cost. And as we've seen in the last couple of years, certain commodities like sugar have increased. However, currently right now it's the commodity price for sugar is decreasing, down 28.32% from January 2012. And in addition, there's been a new initiative to be healthy, apparently, in the United States. So high fructose corn syrup is present in many of these products. But like Albert said before, they've diversified their product line from moving away from just pure soft drinks and going into juices and so these health product beverages. In addition, one other company that has seen like this health resistance is Altria, which is a large producer of smokeless tobacco, and they haven't seen any downside in terms of their sales and revenue growth. Foreign relations, China's losing consumerism for non-Chinese products, and we've seen that they tend to play favorites among their state-funded companies. But despite this, we still see a large growth in terms of Coca-Cola.
Okay, so bottom line, just a quick rehash. So Coca-Cola is an American company with large brand power and it is expanding overseas, so it's increasing its market. Strong growth of the company as well as the industry in comparison with its competitors. Low stock price and high ROE. So just want to emphasize this is a very safe investment that you're mostly going to be making money off dividends. And it's a very diverse range of products, offsets and losses and other lines. So the decline in carbonated beverages can be offset by healthier drinks such as juice and tea.
I have a question.
Okay.
So it's important that they grow, so the stock basically go. But what exactly are they doing to to expand in China and India?
So I think it's not necessarily what they're doing. So like we said at the very beginning, they're franchises. Their model is franchising. And so you're starting to see more and more McDonald's, more and more of these fast food restaurants in these developing countries with larger economies. And so along with those markets, along with McDonald's, KFC, and all these other fast food industries, you're going to start to see a general increase in Coca-Cola sales. Additionally, Coca-Cola is almost becoming like a status symbol among a lot of these Eastern nations, specifically China and India, where it's deemed as I guess like a power symbol to order a Coke instead of a water at the restaurant. And there are several studies on this in terms of like consumer behavior that we tapped into. Okay.
What is it?
Okay.